Hi, I'm Segun Lawson. I'm CEO and president of Thor Explorations. We are listed on the TSXV and on the AIM market of the London Stock Exchange. We're a West African focused gold producer with a portfolio of assets in Nigeria, where we have our flagship project, the Segun Gold Project, a high grade open pit gold project, which we started producing in December last year. And we have a presence in Senegal, where we have a Douta project, which is a couple of years behind where we are in Nigeria. And one thing I really like to emphasize is we have a portfolio as a first mover in Nigeria, a portfolio of exploration assets we're looking to advance over the next few years.
Hello, my name is Shaun Pollard. I am one of the founders and the CFO of Westhaven Gold Corp. We trade on the Venture Exchange as well. Their ticker is WHN. For the better part of the last decade, we've been building the preeminent land position on the Spencer's Bridge Gold Belt, which is southern British Columbia. And more recently, in 2018, we were one of the best performing equities on the exchange when we made a very high grade gold discovery on our Shovel Nose gold property. Since then, we've gone on to publish our maiden resource this year, which is 1.1 million ounces gold equivalent. And we've gone on to find additional zones of high grade gold outside of this resource. This year, we've had some of the best drill results in Canada, including 23 meters of 37 grams per ton gold, 8 meters of 20 grams, so on. We have 2 drills turning currently, 36 holes in different stages of processing, no shortage of potential near-term drill results catalysts on the horizon.
My name is Brad Rourke, and I'm president and CEO of Scottie Resources, also operating in British Columbia, a little bit further north than Shaun, in an area known as the Golden Triangle. As Shaun, we have a new discovery as well, and we just put our 3rd drill on the project, should be turning today. So it's been a exercise of consolidation and exploration, and we're excited to get at it, even in spite of a very challenging market. So,
well, you said it. It's a challenging market. I'm not sure people all have the same reasons as to why they believe it to be challenging. Like Segun, you got into production at the end of last year, first commercial production Q1 this year. What are the challenges that you face? I would assume inflation was a big part of that, but what was it?
I think general market sentiment and really getting the market, convincing the market about the credibility of the company, of the project. We've now, since transitioning from an exploration company, have successfully produced gold in December. We produced over 21,000 ounces in Q1 this year. We improved that in Q2 by over 11%, produced just under 24,000 ounces. So we're over 45,000 ounces for the year. I think there's also worth emphasizing that we've done all this within cost budget of around about $800 per ounce. And we're aiming for 100,000 ounces of production this year. So we do believe that, once we continue to demonstrate to the market that we're producing within budget, I hope the market starts giving us the credibility we deserve.
Well, that's the big question, isn't it? When we sort of come out of this dip that we're in now, I mean, we always do come out of these dips. Just at the time, it feels awful. Do you think that production companies are going to get a little bit more credence than perhaps exploration stories? I mean, Segun, again.
I think everyone in this sector loves a new discovery, loves a high grade discovery. So that's always going to get the uplift in share price. But I mean, if you take us, for example, our operating cash is pretty much on an annual basis, it's pretty much the same as our market cap. So there's definitely some re-rating opportunity there. And then to add to that, we're not just about production now. We are a first mover in Nigeria, and we've taken that opportunity to pick up more ground. We've built up a ground of over 1,300 square kilometers, a very prospective, underexplored by modern exploration techniques, ground around us within tracking distance. So to answer your question directly, I think a re-rating would be natural should we continue to perform. But I do think the exploration side of the story is what a lot of retail investors look for.
Right. And Shaun, challenges that you've faced in BC, tier 1 jurisdiction by all accounts. Therefore, you get credit for that. But it's exploration. It's early days. You've made one discovery. Do you need to make another? What's going to move the dial?
Well, it's interesting because the Shovel Nose property, I mean, we have a major highway literally cutting through the western portion of our claims. We're just south of the city of Merritt. So we have access, we have infrastructure. There's no helicopters, no camps. The Shovel Nose drilling is pretty easy going. I mean, you can be at a Boston Pizza having a pint by 6 if you want to be. What's interesting was last year, though, we had a serious forest fire season as well as floods. And these floods affected BC seriously. They washed out roads, they burnt down towns. We have a property called the Skoonka. We've been wanting to drill this property since 2017. With the discovery at the Shovel Nose, we've been largely focused there. But last year we were planning to get to that. But then the town of Lytton, which is where we would have been based out of, that burnt down. The highway to get us there was washed out. So that's been nature's made things difficult for us to get out and drill that Skoonka property. However, this year, the logistics, it's a bit more interesting, a bit more complicated, but we're looking hopefully to get a drill up there and start turning on that property as well. And the thing about the Skoonka property was, up until the high-grade gold discovery at the Shovel Nose, the Skoonka was really the jewel in the crown that is the Spencer's Bridge Gold Belt. It had the best drill results across the entire belt, 20 grams over 13 meters. No one's been back to drill that property since 2008. So we're hoping to get up there this year, poke some holes and show that that type of grade exists over distance and size.
Right. You're excited about that and you think that's going to move the dial. Maybe historically it has moved the dial. Do you think in this current climate, people are listening? And if so, do you allocate the time, resource, capital to do that?
Well, 100%, because again, this is a belt play. And so the Shovel Nose, we've already demonstrated as the potential to host 1 million ounces. Personally, I think we're going to show a few million ounces by the time we're done. You don't have vein zones that are 4 kilometers long with intercepts of 20 plus meters of 9, 10 grams. I mean, we're dealing with a sizable system there, but that's the Shovel Nose. If we can demonstrate that our Prospect Valley property, our Skoonka property, and our Skoonka Nose property also have this potential, also contain ounces, then maybe we're looking at a central processing facility where these properties could all feed that facility as opposed to a standalone facility on the Shovel Nose, on the Skoonka, and so on. So the sooner we get out there and test our other 3 properties and move them up the confidence curve, the sooner we'll know whether or not we're looking at a big area play here.
Okay, and Brad, I got to come to you. You've been banging out some super high grade numbers and headlines. Are you frustrated by the kind of lack of response in the marketplace? And how are you choosing to while your time away during this dip?
Yeah, I'm not allowed to show frustration because I got to keep the team intact, and because I have, it's not my first rodeo. I was a .com millionaire when I was 25 years old, and know what it's like to get obliterated. So I've gone through these things before. Of course, it's challenging. It's not how I anticipated things would go even 6-7 years ago, but I have not lost any confidence in my theories on the macro and what's going on in the world. So it's a matter of, all I know is I wake up in the morning, I go, it's a lot more challenging. It's challenging for everybody. So who's going to blink first? It's not going to be me. So, it's just a matter of survival at this moment and keeping enthusiastic and doing a program rather than just shutting the doors. So, yeah, it's challenging, but my job is just to make sure everybody's online and on point and teach these younger millennial geologists that it's okay. This is part of the cycle and the cream will rise to the top and we're hell-bent determined. So, we've got a new discovery and we're lucky enough that we're financed. So I do have enough money to go drill holes and maybe we'll be like Forrest Gump on the shrimp boat at the, the last guy standing with drill results when I see a lot of programs being cut back right now. So, our business,
that's a great point. That's a great point, Brad. I want to talk about that. Literally was the question I was going to ask you. You've got some cash. You've got a lot of cash available to you. But it's, I guess, what the market's looking for and your shareholders are looking for is like, well, what do you do with that cash, right? You can say, I'll hunker down and I'll reduce any dilution, or, unnecessary spend, or I can go and try and make $1 worth $3. Have your plans changed?
Well, just to add to Brad's point here, his point, we've been through these cycles before. Like I've been in this business long enough to remember when we were excited when gold went from 250 through 300, right? I'm also old enough to remember when gold, the global financial crisis, went quickly from $800 to $1,900 in a couple of years. Just because we have a gold price environment doesn't mean deals aren't getting done. I mean, think back to when gold was $1,000. Kamenak, which is Ira Thomas, which is our chairman's daughter, She sold that project to Goldcorp for $500 million. Right. So deals will get done. The cream will rise to the top. Like professional management teams with serious projects, they will get the attention. This is where the wheat is separated from the chaff there. The chaff is separated from the wheat. So
I think that's right. I think that's right. And I think that's the nature of these sort of panels that we're putting together. It's just trying to help people understand what they should be looking at and what they should not really be worrying about, because stuff happens, mining's tough and all of that, right? But Segun, I've got to come back to you. Now that, and as an ex-banker, I'm saying this, is when companies start doing well, you want to start throwing money at them, right? So I know you've just got into production. You've got three projects in 3 different countries. You've got multiple projects in 3 different countries. Is it a case for you, get your head down, kind of weather the storm and focus on what you're focusing, or are you having your head turned by some of these bankers and the money that they're offering you when you don't need it?
Look, I remember just very recently, a couple of years ago, when, scrambling around to raise a few $100,000 here and, and now we don't need it. It seems there's huge opportunity to raise this money, but we have no intention of diluting shareholders. We have very strong cash flows at the moment. Our all-in sustaining cost is probably in the bottom quartile globally. It's for the life of the mine, it's under $700. We have a senior debt facility, which was initially $54 million. We've reduced that by 30%. It'll be down to $30 million, $30 million by the end of September. So we have strong cash flows. I think what is key for us is demonstrating that we're not just a single project company. We have 3 drill rigs turning at the moment in Nigeria, where we have some very interesting drill targets, which we're trying to drill. And these are all going towards mine life extension. They're all within trucking distance of the mine. We also have a second project in Senegal, the Douta project, and we hit our first major milestone last year, which is a maiden resource. That was 730,000 ounces at 1.5 grams per ton. We're trying to build on that now, and we're trying to take that through the studies over the next couple of years, because we want to be in a unique position as a single asset producer, should I say, where we can go out and build our second mine organically without having to go out to acquire one. So to answer your question, we have no intention of taking dilutive equity from anyone. We don't need it. If anything, we would be looking to give money back to shareholders rather than an equity raise anytime soon. And then we're also looking at building on what we have.
Okay, really, really interesting, because you touched on a few things I want to get into with the discussion here. I mean, lots of chat around jurisdictional risk, right? And I think West Africa was not getting a good play a couple of years ago. Some newsletter writers writing some fairly negative and pretty dumb stuff, if I'm honest. West Africa has produced a lot of gold, but it's over decades of mining. But do you feel that North American investors kind of get West Africa? I know the AIM guys tend to, but you're dual listed. I mean, where are you seeing most of your trading from? And, are you seeing a slight movement now that you're in production?
Yeah, I mean, originally we were listed on the TSXV via reverse takeover. So, I mean, we had all our listing on the TSXV side. However, raising money kept on coming from this side of the Atlantic, which was the rationale for eventually listing in London. We've actually seen a lot of volume being moved from North America to our London line, and they're quite even now, but London is gradually overtaking. And we find that, investors on both sides of the Atlantic understand West Africa. I think what makes us slightly different and what makes us unique is the fact that our project is Nigeria, and it's not known as a mining jurisdiction. It's not known as, this is the first gold mine in Nigeria. So with that, in that respect, the investors in the UK have been a lot more receptive to investors in North America, because there have been a number of oil and gas success stories on the AIM market in London, and investors have done very well out of that. And now transitioning to mining, they don't seem to be as scared as the North American investors.
Okay, interesting. Shaun, now you've just indicated you worked in London, you know it well, and you've seen a few cycles as well. You've said, looking back at some of those cycles, the way that companies, so the way that investors behave, the way companies behave, and the way that bankers behave is quite telling. It's just, history repeating for sure. In moments like this, sometimes juniors go off and try and think, well, maybe I need to be dual listed somewhere. Maybe that could help my liquidity. Do you see that in this moment? Is it as bad as perhaps it was in previous cycles, or do you think people have learned from the past, or what are your defense mechanisms that you're employing?
Well, whenever you're in a cycle like this, it always feels like it's the worst cycle. So I have to think back to what it was like, say, in 2015 when gold was $1,000 an ounce, or say 2003 when this gold was $300 an ounce, and all we were hoping for was $450 an ounce type thing. This cycle, just looking at the GDXJ, where it is compared to where gold is, I never thought I'd see GDXJ below 40 again. It was trading at, when gold was $1,300, it was trading at this level. And the major mining companies, they're printing cash at $1,700 gold right now. Their average all-in sustaining cost is around $1,150 an ounce. So we just got to hunker down, keep our heads down, and be positive, because we've seen this before, right? And again, the money, when it flows back into the sector, back into the space, it'll flow to those real companies that are generating good news flow, right? And also importantly, just to touch upon the dilution comment, dilution can be good sometimes, right? And so our strategy this year at the Shovel Nose is very simple. We have a very high-grade gold vein zone. We keep 1 foot on the vein, we keep 1 foot off it, and we're slowly drilling density along this. We continue to hit high-grade gold. If we can raise, say, we'll likely raise money, whether it's next week, next month, next quarter or so, we'll look to raise money to keep the drills turning. If we can add or double our resource, and we only dilute the company by 10% to double that, well, I think that's money well spent.
Okay, but talk to me about that concept of, in storms like this, it shakes the trees a bit, few people get shaken out, and, the good companies survive. You've got to truly believe that, to think, well, actually, I don't mind the occasional dip in the market, because it sorts the, I say wait from the chaff, to use your phrase from earlier. But how do you ensure that you're one of the ones that survives? And how do people identify that you will be one of the companies that survives? What should we be looking for?
I think it depends on your goals. Right, we're exploration focused. Our goal is to advance this property as far downfield as possible and pass it off to a producer type company. Now, our management team has done that before. Our chairman, Gren Thomas, has made multiple discoveries, created billions of dollars in market value over the years. And so we sort of reverse engineered what a major mining company looks for, right? They want a tier 1 jurisdiction. Well, just in the last few years, Newmont came in the big time way and acquired GT Gold. Newcrest came in, paid $800 million for a 75% interest in Imperial. Then they bought Pretium for $3.8 billion. So the majors are coming to this province. They're looking for projects. So what does a project look like that they might be interested in? Okay, well, it has to be something that moves the needle. That means at least 2 million ounces. Well, I believe we're going to show more than 2 million ounces at the Shovel Nose. And again, looking forward to, say, things like internal rates of return. Well, we're off a highway, we're near a city. So right there, you're reducing your infrastructure, your upfront CapEx costs, and you don't have to build that stuff out. So chances are you're also collapsing your time to cash flow. So we believe we're going to show a multi-million ounce project with a significant, with a high IRR, a small CapEx compared to a lot of people trying to bring on new projects in the middle of Timbuktu. Building something a major wants, basically.
Well, that's really interesting concept. And maybe, Brad, you can step in here, because I'm always interested in people's offense and defense strategies. And if you have got a sense of what a major or mid-tier would like, you work to that model. But you've also got to, as an exploration company, be cognizant of what the market wants, because that's the thing that feeds the beast until you get to where you want to be. So, Brad, where are you? Are you offense or defense at the moment?
Well, we're offense. But we're very similar to what just Shaun said. When I first started off, I was quite naive of the exploration, of running an exploration company. I was in mining services for all my 20s. I've been on every property in the province, did all Murray Pesham's work. I'm not oblivious to it, but this is the first time I ran a company. But basically I said, okay, Pretium is building a power line right beside an old past producing gold mine. How can I lose? So that's what got me involved. But I've been reverse engineering to talking to major companies and going, okay, what is it that you guys look for? And you need size, you need the discovery. And I've been just basically building this because that is our function, is to find something, move it on to more capable hands. And, we're a great exploration team, but both Shaun and I have a single asset producer here that we got a new customer over here. But, because we are talking to a lot of single asset producers, but I've been really building this to fit the framework of what these majors want. And I'm in a very similar to Shaun. I mean, I have infrastructure. We are in a good position. I'm a little bit further north, but Newcrest is my neighbor. I own everything south of Newcrest and Newmont, and I'm sandwiched between two mines. So again, the cost of putting something into production, I'm just maybe a couple of years behind. I'm still got to crack that 1 million ounces, which I think will be at the end of this year.
So Brad, do you get the exploration tax credit back as well from the government?
Yeah.
So this is something fantastic that British Columbia does, is for every hard dollar we spend, the government gives us 30 cents back. So the government's basically paying us to explore. So 2 weeks ago, I got a check back from the government for $2.1 million. That puts us at $6 million in government refunds just in the last 5 years alone. So that also saves on dilution.
No, that's interesting. Well, and Segun, what do you get? I mean, you've got a massive Nigerian investor base. I mean, a lot of money coming out of there. What's going on?
Yeah, look, not just that, we have a very enabling mining code. Like I say, we're a first mover. They're trying to attract people into the sector. We have, what we call a pioneer status for all mining companies, which means 5 years of zero tax payable for the first 5 years of production, plus capital recovery. So up to $90 million on our CapEx back, tax-free before we start paying corporation tax. So it's very enabling. We have free repatriation of our dividends. We're allowed to own our projects 100%. And what can I say? It's a low royalty rate jurisdiction as well. It's about 1.5% on NSR going to the government. So it's a very attractive mining code, and very value enhancing for shareholders.
It's like mining's going through a kind of a renaissance at the moment. You're looking at what's going on in South America. Lots of political wranglings and socialism is high on the agenda, and I think some North American investors are quite nervous about what that could mean. Talks of nationalization, etc. So and First Nations issues in Canada and even down in the USA. It seems like the phrase tier one it's becoming a little bit harder to call these days. So, I mean, again, stick with you, Segun. You obviously mentioned a few things that Nigeria's trying to do to kind of incentivize what's going on there, but also Burkina Faso, that's not had an easy ride the past couple of years, and Senegal's had its problems. So, what are you seeing governments starting to do? I mean, are they pro mining in West Africa? Certainly. I mean, not just from a financial point of view, just the social aspect of it as well, the job creation, the spill on effects from that, the services that go on, the transfer of knowledge from a lot of our expats come from Ghana, the transfer of knowledge to Nigerians as well. It's just, all encompassing. And I think the government's really behind it, trying to promote it in that regard. Right. Okay. And what about you guys? I mean, you've mentioned a few sort of things that they're doing well. I mean, is there red tape being thrown at you? Are you concerned about the movement towards, this kind of anti-fossil fuel movement in Canada, it seems? Is that going to help or hinder you?
Well, you're still getting permits are being issued in British Columbia on a regular basis. I mean, it wasn't too long ago, Ascot Resources, which I believe is up near you there, Brad, they got their development permit. Osisko Development got their permit to expand their mine. Artemis Gold got their development permit not too long ago. There's a gold mine that just about 20 kilometers to the east of us that was acquired 2 years ago and is now direct shipping ore to a mill about 100 kilometers away. So things are getting done in BC. Okay. Interesting. But the one thing that you've all got in common is this kind of environmental component of the ESG badge, which everyone's been getting a little bit crazy about because it's so polarizing, certainly amongst the investor community. Environmental means different things to different people. And, if I speak to some of the older mining folks, said, well, we've always done it. That's not a new thing. It's just a new way of framing it. So, I mean, Shaun, is that something that you think is, good and healthy for mining in terms of changing its brand perception to the wider audience, or is it quite frankly business as usual? Well, no. I mean, mining companies have to adapt, and they have been adapting. I mean, the days where you could walk around and prospect with a stick of dynamite, like 30 years ago, you can't do that anymore. I mean, this ESG is going to be a big driver moving forward. I was touring a mining company to our site not too long ago, and you drive underneath a major hydrothermal line, and they pointed, a hydropower line, and they pointed out if you're able to access, say, hydro-generated power or natural gas power, that's going to go a long way to lowering your carbon emissions. So absolutely, the companies are thinking towards that, and if you're able to run off, low carbon energy, natural gas, hydro, etc., all the better for you.
Right, but isn't that an sort of unnecessary cost when you're an exploration company? Every dollar counts.
Well, again, I mean, as an exploration company, our drilling costs are at the lowest quartile. I mean, again, we're off a highway, we're near a city, no helicopters, no camps. I challenge people in Canada often to say, I bet you our drilling costs are lower than yours. And when it comes moving forward, the hydro line, we actually have residential power to our property, but the hydro line itself is just a few kilometers north, so it won't cost much for us to, tap into that. Or we have a natural gas pipeline running along the western portion of our claims as well, which we could also look at using for an energy source here.
How do you feel about that, Brad?
Well, again, we're very similar. I have a hydro power line on the property boundary, was one of the catalysts why I got involved. I think so. The environmental, what have we seen in the last, because we've been doing it for so long, is, used to be if you drop 3 or 4 drops of gasoline, right? These are recordable events. 20, 30 years ago, we had oil drums, and I mean, it was, the practices have gotten so much better. And then on the social side, with the local community and hiring, it's, I've been at it for a long time and worked, dirty hand fingernail guy in northern BC, and working with the local community. Now I've raised my family for the most part of my life up where we're operating. I'm down on Vancouver Island now, but I've seen changes, and and I generally think for the most part, the 80-20 rule, 80% of the people in this industry are trying to do things way better than we were before, and so I think it's positive. But if I'm going to tout my project, I'm on a brownfield site. It's a past producing mine. I'm not disturbing anything, and because I have hydropower, and I'm in a very difficult place in the world to explore, because it's very rugged apart from where Spence's Bridge is. But we're lucky too. We've got road access. We do use helicopters, but not on my main asset. It's all skid based. So, we're not disturbing a whole bunch of wildlife or anything like that. But the ESG is here to stay, and it's not as cumbersome as one would think. It's just extra boxes that you have to check, and mostly we're just trying to look after the local community, and we're on Nisga'a territory is where Scottie kind of sits, and the relationship's fantastic. But it doesn't hurt that I coached most of the kids in northern BC of sports for 20 years, so I know all the families personally. So anyways, it's great, and it's not really that much of an issue. But I do think people should need to understand is these companies are doing really good work. Like, we're not, no one's hiding and burying barrels of oil anymore. And I think that might have been the case in the 80s, right? But that's just, the practices have changed. They're black and white. We're so much more responsible now.
And I'm glad to hear it. I'm glad to hear it, and long may it continue along that path. Shagun, if I look at West Africa, you talk about new, good mining code in Nigeria. It'll be a new mining code, presumably adopted from somewhere else. Everything's going to be fairly nascent in country. So things like mining new, but also things like ESG practice new. I mean, you presumably have got to work hand in hand with the Ministry of Mines to establish a kind of good conduct code there as well, don't you?
Yeah, look, we embrace ESG, particularly being in Nigeria and the history and track record in the Niger Delta on the oil and gas side, issues with the communities. And we found that having good ESG policies and full transparency, working hand in hand with the communities, has actually worked to our benefit. It's, giving employment, letting them understand, the timelines involved, going from exploration through construction through to production. On the carbon footprint side, another aspect about being in Nigeria, There's a lot of natural gas. We fully transitioned all our power to CNG in May. We now run our process plants and all the electricity that comes to site from CNG, which has reduced our costs and our carbon footprint. And the same from the government side as well. So the government, yes, they do have, it's in its infancy in terms of the mining sector. However, we've taken it upon ourselves to try and keep the world-class top standards with our ESG.
Right. Okay. And interesting. And in terms of the engagement with locals, is that it can't be just basic as like we just want jobs, we just want income. I know you built a big camp and some permanent buildings there as well, so which is always going to be welcomed. Or do you have to sort of manage things slightly further afield as well? I'm focusing on Segun specifically because I'm not quite sure what the projects are that you're doing in Dula or Hunde at the moment.
Yeah, no, it's not just as simple as that. Like I said, transparency was key. So letting them understand that, for example, during the exploration phase, drilling is very visual. You've got massive RC and diamond rigs drilling 24 hours, pulling out coal from the ground. And then you go away and tell them, look, you haven't found anything yet. You haven't sold any gold. And they find it hard to believe you. So it's an educative process as well, letting people know, going through exploration, determining the economic feasibility of it, tapering our community projects to our budgets at various stages through exploration, through development, and now we're in cash flow. So we've had a range of projects, from simple projects like grading the roads and putting in boreholes while we're doing exploration, to building schools, to giving scholarships, tertiary education scholarships now, medical centers. And I think what they find most appreciative is not just the jobs, it's the knowledge transfer, it's the upskilling of local community members. Even something as simple as welding, giving people the skills, chemists to work in our labs, people who have secondary school education, and then upskilling them to work in the labs to actually provide more value to us and earn more income for themselves. Okay. So, yeah.
It's interesting. I did want to kind of get on to question and ask you about some multi-jurisdictional de-risking and so forth, but I made this conversation for another day. So I want to kind of stick to when we came into this, which was people are nervous about the economy. They're worried about, what it's going to mean. So all this printing of money has meant that we've got to pay for it at some point. So taxes will go up, costs have gone up with inflation across the board, less disposable income, less discretionary spend, and potentially that's affecting a big swathe of investors' decision making, right? So for you specifically, Segun, I'm going to ask the same of all three people here. So how specifically have the markets affected you negatively, and what do you do about it? And in the sense that if you're concerned enough to kind of change the way that you had planned to do things. Segun, that's what for you. I'll stick with you for now.
So when you say the markets, you mean in terms of our share price?
Well, no, I mean, no, not the market. I mean, the markets more broadly as to how they affect me, a retail investor. I'm nervous, right? Should I be? Because I'm giving a broad blanket approach of these are the problems all mining companies will face. But the reality is different companies at different phases of their growth and different jurisdictions will be affected differently. So I want to know for you, how have you been affected specifically and what have you done about it?
Sure. Yeah, look, that's all very valid. I think across the board, everyone's been affected. One of the key ones has been, the surging oil price and the diesel prices. Like I say, we switched to compressed natural gas, which has been a massive saving. It's about less than 40% of the diesel price on our process plant, but our whole mining fleet still runs on diesel. So we're bound to feel that effect. The same with shipping costs and ammonium nitrate, for example, to make our explosives. We've tried to mitigate these risks by stocking as much as possible, 6 months ahead, 9 months ahead for various things, for reagents, for spare parts, for ammonium nitrates, for explosives. So we think we will certainly weather the storm in terms of costs and inflation through to the beginning of next year. And then hopefully we continue to put mitigants in place. All these inflationary costs slow down, at certain points. But like I mentioned at the beginning, we have a very good operational margin from our costs to our revenue. And there's a lot of buffer in there. We put a good contingency in there. We are running at design capacity, above design capacity in terms of our process plant. In terms of mining, we're very fortunate the ore body is reconciling very well and sometimes over-reconciling to the reserve model. So we think we've put as many mitigants in place, and we think there's a lot of value here that people don't realize is still on the table.
Yes, it's interesting. I'm Shaun. I'm going to come to you with this. Obviously, you get a slightly different company profile. You can be affected in different ways. So I'm interested in how you react.
Right. Well, I've been a bit more selfish here in that a couple months back, we announced one of the best holes drilled in Canada year to date, 23 meters of 37 grams. It sent the stock up to about 75 cents. I never thought we'd see south of 60 cents again. Here we are. There's basically a buyer's strike across the market. Our stock started trading in the 35 cents range. I've been buying our stock pretty much every day this week here. Tuesday, Wednesday, I was on the buy this morning. So I've been using this opportunity to buy my company.
That's good, but which is a good message for shareholders or people looking at you. Very good indeed. But I'm more interested in what the company's doing, because I want to kind of feel comforted by you that the company is not just seeing an overall, here we go, it's 12% increase in everything we do. I mean, how have you been hit?
There's very little. So Segun pointed out diesel costs. That's been one of the largest inflation drivers. It's up about 30% this year, but there's nothing we can do to mitigate that at this stage. Again, we are an exploration company, so we just have to, cope with it. But diesel costs are coming down. But again, our drilling costs are still sub $300 per meter. That's diamond drilling, which is at the bottom quartile of Western exploration. And I'm talking America, Canada, and most of Latin America as well. So,
but let's break it down. Make it really simple for people to understand. It's like, so as a percentage of your overall spend, fuel is what? It's up 30%. That's a big number. I don't want to apply it to everything that you do.
Drilling is our number one cost driver, because as an exploration company, that's pretty much all we do. And so a 30% increase. Last year, we spent about $10 million on drilling. This year, to accomplish the same amount of meters, given that the rocks the same, overburns the same, we'd have to spend about 13 million. There's nothing we can do with regards to that.
Interesting. Brad, how's it affected you? What are you doing about it?
Well, we've actually have done a few things where we've always, in the beginning years, used consulting companies, and that costs a lot more money. We do it all in-house now to try and save. We've bought a warehouse in the town of Stewart because we were shipping equipment all the time, and we bought a lot of our own equipment like skid steers and stuff, so we don't have to rent those things. So because we were so serious in exploration, we know and we plan to be here on a 5-year plan, not if we don't hit, we're gone away, right? So we've done that. Again, fuel's up 30%, and it's probably a lot more expensive for me than it is for Shaun because just our location. And diamond drills run on diesel. But, we think, and again, I've only been drilling for 3 weeks now. So, that initial cost, my drill per meter is very expensive, but we see it as I get my weekly reports that we'll get it down, to under 400, even with the increase in price, which is good for the Golden Triangle. There's, you go look at Seabridge or, these companies, and they're pretty expensive. So we've really focused in on costs a couple of years ago. And again, no consultants, it's all internal teams. And then, my job in the wintertime, because we're seasonal, is I get those the technical team jobs in other places just so I can retain the intellectual property, the smart kids or guys and girls. And, most of our technical team's been on the property 4 years. They know it well, right? I'm not recycling new geologists through. So, we run it pretty tight. This is the first year I'm not on site right now, but I've been an operational CEO. I'm up on the tools. I'm running equipment. Hell, Thomas is on the drill today. Like my VPX, he is actually on the drill today because one of the helpers got some rash and we just got to keep drilling. And so Thomas goes, well, I'm gonna jump on the drill. I'm going, perfect. Get some pictures. Yeah. So, it's tough but it's just, we're in the job of drilling holes. How can we get the most holes per dollar? And that's kind of what we focus on. And what are we doing different? really nothing. Our job is to drill holes. We've found something. We're doing exactly what we did the year before and the year before that, and we're always trying to save costs. That's, but we're in the business of drilling holes and, and not making people wait. Like, we're going to have a lot of unanswered questions very soon, and hopefully they're as good as the last 2-3 years that we've shown the market. So.
Okay, guys, look, I want to finish up here. I want to wrap up. Just conscious of your time. I'm going to ask each of you to give us just a 2-minute reasons to believe, reasons to buy your companies. Got a big audience here. Go for it. Segun, I'll put you up first.
Okay. Well, first thing to say is, look, we're now a producer. We're now generating real cash. And not just that, we're generating, close to $100 million a year, which is not too far off our market cap. And that's operational cash, not revenue. Not just that underpins our value proposition, but we do have a lot of upside potential in terms of near mine exploration, transitioning to underground, extending the mine life. And like I mentioned earlier, we've got a second project. We're diversified by stage of development. We're also diversified by jurisdiction. We have a second project we fully intend to build organically and add further ounces to our production. So we think we're extremely undervalued. We think this is an excellent buying opportunity. We've demonstrated that since we've been in production. We've met all our guidance. We believe we continue to be at the upper end of our guidance for the year and through next year. And yeah, we're very excited about the next 2 to 5 years as a company.
Okay. Well, let's put aside the fact that for the better part of the last decade, we've built the preeminent land position on the Spencer Bridge Gold Belt. Let's put aside the fact that directors and officers, we own 25% of the company. We're heavily aligned with our shareholders. Let's put aside the fact that we can drill year round. The only thing that I've seen recently that's been able to actually move the needle with regards to share price has been high-grade drill results. Again, we've posted high-grade results consistently throughout the year. We have 2 drills turning right now as we speak. We have dozens of holes in different stages of processing. So looking forward, there could be near-term potential for high-grade drill results coming out of Westhaven Gold.
Shaun and I are so similar. We're following up on a new discovery with very high grade, not quite 600 gram meters, but I do got 400 gram meter holes. So, but I mean, it opened up my eyes at Westhaven, and it truly is a new discovery on his project for sure. What I can say is we have a new discovery on the Blueberry asset that we have. We only have 7,000 meters of drilling on it. It's a new discovery, and I have 10 100-gram meter holes that are spaced properly. Like, we've gone from 0 to 720 meters of strike on the road, and 7,000 meters with only 10 100-gram meter plus holes is pretty exceptional. The other part I'd say, and it goes back to another question, is we're in the depths. We're at the bottom of the trenches. And if 2 years ago I would have told you to buy ExxonMobil, or if I would have told you to buy CNQ, different sectors, or pick a coal company, and I'm not advocating for coal, it would have been the hardest thing in the world to buy those companies 2 years ago. That feeling that you would have felt as an energy investor, and it would have been the hardest thing to write a check. You look at those charts now, the free cash flow of these oil companies, it's the same right now. We're at the bottom. The good companies are going to rise to the top. I'm probably going to go out and buy some Westhaven today. I really am. I mean, I've been looking at it and I just go, like, you have to understand it's in a new area. No one's even close to them. Like, it's a beautiful, beautiful project. And with Scottie, look at Newcrest is my neighbor. Ascot's North America's next mine. Scottie owns basically everything between the two of them. So I'm sandwiched between 2 very viable mills. And I got 7 past producing gold mines on our tenure, but we're just focusing on one right now, and we're hitting it out of the park. So, do your due diligence, but everything's on. You can go look on our webpage. Every interview we've done for the last 4 years, you can just look at them and take you 2 hours and go, did we do what we said we're going to do year after year? We have, our chins are up. We're enthusiastic, and we're going to have results coming. News is coming soon. So we're excited.